Hey there, and welcome to the medium term trend video, or the ghost trend as we like to call it. It's good to give these things a name. You can quickly determine what's going on if they have a name that's adequate, that's suitable. This is the ghost trend, or the ghost trade, or the ghost direction. This is the medium term trend. The medium term trend, we look at the 34 and the 13. So what I'm going to do now is strip away all of the indicators that we're not looking at right now. We're going to see some trade examples using all the indicators, but right now, to get kind of the bare bones look at how the medium term trend works, I'm going to get rid of all the other indicators. So here we have just the bare bones, the two moving averages that constitute the medium-term trend. We've got the 34 EMA is the blue dashed line, and the 13 EMA is the thicker red solid moving average. When the 13 crosses above the 34, the medium-term trend is up. And when it crosses below the 34, when the 13 crosses below, the medium-term trend is down. Now we can see instances where if we had the 5 EMA, where the short-term trend would actually change directions, and it does in this area here. But because the medium-term trend is still short, is still down, the short-term trend will quickly adjust itself and come back into alignment with the medium-term trend. Trades against the medium-term trend on the short-term trend are very short-lived. They don't go very far because the medium-term carries more weight. The longer term trend you have, the more weight that it carries. The more that trend is likely to continue going in that direction. So this will help balance the shorter term trend. The medium term trend gives us a better opportunity, I guess, with the smaller term trend. If we know that we're seeing a reversal on the smaller term, but the medium term is staying the path of its original trend, we know that that smaller term is more than likely going to turn around and end up going back in the direction of the longer term trend. Like the ribbon trade, the ghost trade has the same set of rules. Instead of using the smaller moving averages, the ghost trade looks at only these two moving averages, the 34 EMA and the 13 EMA. So when we have a downtrend, we have a crossover here, and the medium-term trend crosses down. The 13, the red line, is underneath the 34, which is the blue line. And as long as the 13 stays underneath the 34, we have a medium-term short trend. Now, to take a trade or find a trade setup using the medium-term moving averages, what we're looking for is price to pull back to the 34 and then close back on the other side of the 13 in the original trade or trend direction. Here, the trend is down, so we're looking for price to pull up, hit the 34, and then close back below the 13. This is a setup. This is a ghost trade setup. And in the opposite direction, we've got a crossover here. 13 crosses up over the 34, and then we're looking for pullbacks to the 34, and then closes above the 13. We've got 1, 2, 3, 4, 5 different instances in this uptrend, this up medium term trend where this is the case. And they all work out. They're all nice trades. Now, of course, we won't be trading the ghost trade or the medium term trend on its own merits. It is incorporated into the bigger overall trading system. Some of these trades will be trades we can take. Other trades will be filtered a little bit, either with the DPI or the parabolic SAR or whatever the case is. We won't be taking all of these trades. Of course, every component will function as their own piece, and this is one piece of the bigger puzzle. This will take the extra step in verifying a trend. So we know that we're trading in the right direction, even if the short-term trend says the trend is down. The medium term will disagree and say the trend is up. Generally, the longer-term time frame trend is going to prevail. So if the shorter term says things are looking down, The longer term, in this case the medium term, is going to carry more weight than the smaller term, and the market will generally want to switch directions and go back into the direction of the medium term trend. Again, we have some more examples of short-term trend setups. Price tags the 34, closes below the 13. Price rises, hits the 34, crosses below the 13. The 13 does not cross to the other side. It gets very close, but it doesn't happen. And we get another instance here. Price rises, touches the 34. Price rises, touches the 34, closes below the 13. So we get these shorting opportunities here. And there's some more shorting opportunities in here. Price closes below the 13 after it touches the 34. The trend changes. Price drops down, hits the 34, closes back above the 13, and carries on its way. So we're going to have these different intensity pullbacks. We're going to have these little pullbacks and these greater pullbacks. And when you look at a market in this area here, it did come down, it pulled back, and tagged the 13. And we know that the 5 moving average is in here. So we've got the opportunity to take a ribbon trade in here. But you do have these more intense pullbacks, these little more aggressive pullbacks. But in the case of a more aggressive pullback, it doesn't mean the trend is going to change. We just need a different way to look at it. The short-term trend will change with the more aggressive pullback. But that doesn't mean that the general trend changes. Just because the short-term trend changes direction as it changes quickly doesn't mean that the overall trend is going to change. And the 13-34 combination, the medium-term trend, will help us validate the fact that the trend isn't actually changing, just the pullback's a little more severe. So we're going to use this quite a lot. This kind of trade is actually a very common trade in the rapid results method. We're going to see pullbacks to the 34 very frequently, and then a close past the 13. So let's take a look at a couple more examples really quick here. We've got the trend, medium-term trend turns down when the crossover happens. Price pulls to the 34 and then closes below and then drops off a cliff. Now, that happens here. Of course, they're not all going to win all the time. But in this case, price hits the 34, closes below the 13. We're going to get those additional filters. Like I was saying, we can't just trade this as its own system. We need to have the additional checks and balances, as it were, and the parabolic SAR and the DPI, and all of these things will come into play and help make us take the best trades. We will be better informed as to which trade will work and which trade may not, such as this. So again, it's part of a greater system. It's part of a bigger package. But this is essentially what we're looking for. Pullbacks to the 34 and closes past the 13. And that is the ghost trade setup. Thanks for watching this video, the introduction to the ghost trade. The next 2 videos, we're going to look at buy examples and sell examples. And this is going to be ghost trade examples with all of the indicators, the DPI, the parabolic SAR, the ribbon even, and the 89. So we're going to take a look at what the whole system is. We're going to look at stops. We're going to look at take profits, all based on ghost trades. So thanks for watching, and I'll see you in those next videos.